Hello, my name's David Khan. Please keep watching this video because I'm going to show you how a strategy that we use with Forex Trading called the London Daybreak strategy, and this is the latest incarnation of it. So please keep watching and I'll show you how you can take trades most days using the London Daybreak strategy. So before we carry on, I'll just shift myself down here and we'll get on with it. What we're going to do is, this is called the London Daybreak strategy, and basically you're placing your entry on the hourly candle, and it's the 8 to 9 hour candle, 8 a.m. to 9 a.m. UK time candle that you're looking at. And what it is we do is first of all, what we do is these lines here are me marking out the hour before the 7 to 8 hour candle, so I know where to put my entries and my stop losses for each trade. So basically what we do first is we have to determine whether the trend of the trade, basically whether it's going up, the trend is going up or going down. So what we do is we look on the hourly timetable and we zoom out to see the bigger picture, and as you can see, this is the 50 moving average line, and this is the line we use to determine the trend of the trade. And as you can see, it was going up there, but now it's started to turn and it's going down. So basically, if price is under the 50 MA, it's a sell, and if price is over the 50 MA, it's a buy. So now we've determined that where we need to place our entry is on the sell, we will begin. So what we do then is like I say, we determine what the 8 a.m. to 9 a.m. candle is, and that's this one here. So what you do is you find the bottom of the hourly candle, wick and everything, and then you go 10 pips below that, and that is your entry level. And I've just indicated that there on Tradingview. And the stop loss is at the top of the 8 to 9 candle, and that's where your stop loss is going to be. So what you do basically then, you place your trade, and what I do is once the trade is triggered, which is obviously triggered there, I wait. What I do is I let the trade go to 20 pips, and then I either get out of the trade or I lessen my pip figure and then carry on. You let it go to 20 pips and then you bring your stop loss to either break even or 2 pips above break even, just to give you a little bit of money, and then let maybe half of your trade, your pip money, or a quarter of your pip money, is very much up to you to follow it down, and you bring your stop loss down accordingly. And that's how we actually trade using the London Daybreak strategy. It's a very, very easy strategy to do because you only need one indicator basically, and that's the 50 moving average, and that's to determine the trend of the trade. But I've got some news. This is for all Imarketslive customers now. In conjunction with that, we use something called a fast indicator, and I'm going to show you a little bit about that as well, which helps tremendously with this trade. So what we'll do first of all, I'll go to I'll get the fast indicator up, and so there we go. Just please bear with me. Okay, so this is for the fast indicator. You have to go down to the 15-minute time frame. Okay, so just let me get rid of that a minute. Okay, so basically the 15-minute time frame, that line there is the line I drew on the hourly to indicate where the hourly where I place my entries, and there's the line that I was using for my entry, and there's the line for the stop loss. So basically the fast indicator is the this down here. Now fast indicator is 33 indicators all rolled into one. So basically and it works on the 15-minute time frame, the 5-minute time frame, and the minute time frame. But for the London daybreak strategy, we only need it to work on the 15-minute time frame, and I'll explain. So once you get the fast indicator, it plots what the trade's going to actually do. So when it's a red, it's a sell, and when it's green, it buys. And once it goes into these bands here, the deep maroon coloured band and the deep blue band at the bottom there, that's and it goes red, that's a really, really strong indication that it's going to sell. But it's showing sell anyway. So what you do is as you can see, the trade was triggered once I got into about 1, 2, 3, 4, 5, 6, 7, 8, 2 hours into placing my entry, the actual trade got triggered. And as you can see, if you follow the line all the way down, the fast indicator is definitely on red, so that means sell. So it gives you a very strong indication that you actually put it on sell. This is if you want to do it manually. So you look at the trade, and when it's still on red, you keep it in the trade, and it's only when the indicators down there tell you it's green, you actually get out of the trade. Okay, so you would have actually got out of the trade because it left that blue line there. So once it leaves that blue line, there's a pretty clear indication that the trade is actually changing, and it might change to green sometime soon. And in fact, it changed to green there. But personally, I would have got out once it goes out of that little blue box there, and there's a short indication there that it's telling you basically the trade is the price is being exhausted basically, and it's ready to take buys basically. So when the thing turns upwards, you will then get out of the trade. So if I was to take that for example, I entered here at 1.30861, and because of this fast indicator, if I was doing it manually and waiting for the trade to turn, I would have got out of it at 1.30453, which is roughly that's 40 pips. So you would have earned 40 pips, and then that's done for the day. So that's how you can gain more pips by using the fast indicator. Now the fast indicator is only for Imarketslive customers. So if you want to learn any more about the fast indicator and how to use it itself, please look up a gentleman by the name of Steve Gregor and go on his trainings in the back of your Imarketslive office to learn more about the fast indicator, because fast indicator can be used on the harmonic scanner, can be used for bounce back, all the other strategies that we're actually using at the moment. So if you want to learn more about that, please look Steve Gregor up. But if you're not in Imarketslive and you think this is good, please put your name underneath it and we'll send you some more info. So that's all I have to say. Thank you very much for your time today, and happy trading.